This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live this Tuesday morning from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Sonia and Nigel. Guys, hi, morning.
Hi, good morning. Looks like the bulls have got their mojo back, and that momentum is sort of picking up in the market now.
Well, yesterday it did feel like we were at around 18,000 odd. You had the mid-cap index that did pretty well. You had plenty of stocks that did well. Remember that song from Nirvana, Smells Like Teen Spirit?
Smells like new highs, huh?
It smells like new highs, yeah. We're getting in that direction.
We're very close to new highs anyway, right? I mean, the bank nifty is just 2% away from a new high.
I mean, so it's a matter, it's just a sort of technicality in that sense. For all practical purposes, the indices are already there, but you have to get there to say that we are at new highs. But will we see a quieter Tuesday as compared to a fiery Monday? I think that's the question, because yesterday was just gangbusters, right? The market basically erased the memory of last Friday's losses and how it started higher and then continued to move up in a gentle incline all through the course of the day, which means that you could have gotten in at any point and you would have been higher and in the money thereafter. So it was not a gap up and then nothing happened for the rest of the day. So that's the market. That's the kind of market you want. Overnight cues are kind of flattish. I mean, this market is just consolidated. The Nasdaq was up about 0.18. The S&P was absolutely flat. Yields on the 2-year are back up at about 4%, but they've been knocking at 4% for the last 2 or 3 days. They've not been able to cross it. Oil prices are inching higher. I mean, the entire mix after the US jobs data has changed, because before the jobs data last Friday, there were concerns about recession. Now, markets are getting a little more confident that it's not going to be bad. Maybe in the US we'll see a soft landing, but it won't be a hard kind of crash, a very sharp slowdown. At least that's the data from sort of last Friday. Now, the next big data point out of the US is the core CPI number, the inflation number. So the labor market is strong. April was super strong. What about CPI? And I think that we'll only know Wednesday, as around the time that the US markets open. There is still 2 days to go for us before we get that data. Here in India, things looked quite good, at least on the Nifty. Actually, on all the benchmark indices, it looked pretty good. The Nifty broke above the recent high of 18,267. That was the high which we made last Thursday before Friday's big sell-off. So we closed kind of around it. Intraday, we took it out very comfortably. The next resistance for the Nifty is 18,450. 18,450, by the way, is nothing but the 78.6% retracement of the entire fall. In a way, that's the last stop before you kind of head out to newer highs, and you kind of have to project sort of 18,887 kind of levels once that is taken out. So that's the next logical kind of resistance to take note of. Now, in all of it, if the uptrend has to continue, the low from Friday should not be violated. That is still some distance away, because we've very quickly put some distance between where that low is and where we are. So that was 18,055, and that should hold if this uptrend has to continue. So that's the Nifty for you. On the bank Nifty, we are yet to take out the last Thursday's high, which is 43,740. It's not very far away. It's about 1%, less than 1% or so from where we are right now. The low on the bank Nifty, which should not be violated on the downside, is 42,582, and that should hold if this uptrend has to continue. So, I mean, the momentum is with the bulls. The inclination is try to buy the dip and look for higher levels, and I think that kind of impulse will continue. If you're trading, I mean, as I always say, watch the price action. Don't do anything right out of the gates. Watch the price action for the first 30 minutes, 40 minutes, and then let the market tell you what you want to do. But it's absolutely clear. But the SGX is not showing a very sharp decline or anything. I think the last I saw, it was just a 20, 30 point change. So it's not giving you a big kind of move that, provides that opportunity. So see the price action, the first 30, 45 minutes of trade, and then decide what you want to do. But the impulse is to look for higher levels from here on. Sonia.
Oh, absolutely. And it's a great time to be bullish on the market, right? Because you have many things that are working. I think recession fears are receding globally.
Yeah.
So demand is picking up globally as well, and that bodes very well for markets like our own. So as you said, momentum has picked up. I mean, the Nifty is now at a 5-month high, and definitely the bulls are back. Even that resistance zone that we were talking about in the last many days, 18,200, that has been conquered effortlessly. And in the last 1 month, the Nifty has put in almost 640, 650 points. A large part of it has also come from the FII fraternity, so big buying coming in. Yesterday, there was, 2,100 crores of buying in the cash market. That's a huge chunk. And put together, FIs have bought about 7,650 crores. There's also a lot of momentum back in leadership sectors like banks. The bank Nifty, by the way, is now just 2% away from its 52-week highs. So all set to make new highs over there. In terms of local cues, many things to track this morning. You have the Mankind Pharma IPO that will be hitting the exchanges today. And this is a big one. It's the largest IPO this year. It'll be raising over 4,300 crores and great pedigree, no debt of the company, very strong growth, 16% compounded revenue growth in the last couple of years, strong institutional subscription. So this is going to be a big one to track. And Macquarie says the company is well positioned to double its profits by FY26. So that's how much, conviction the market has. Also, you have companies like Apollo Tyres, Lupin, Castrol, Everready, Nazara Tech. So a lot of non-index large caps that will be reporting their earnings today. So we'll keep track on that one as well. But otherwise, you'd have to say that the bulls have tightened their grip on the market. And, now there could be a little bit of a FOMO factor. People have perhaps that have not participated, retail investors. Generally, when they see the tide turning, that's when they jump in. And, you could definitely see that give an additional push to the market.
Well, yesterday was a very, very good session, Sonia, because the last stick was virtually at the high point of the day. And, when we were moving into the final hour, you had a bit of an intraday dip, which got bought into. So the data points are good. Now, from a bullish perspective, you want to follow through day. So you want to see a good Tuesday as well. Just to put on the broad trade setup out there, the FII data is very, very bullish, whether it's in the cash or the F&O market. Buy on dips on the Nifty is likely to continue till the global cues are more or less stable, which is the case as of now. And the Nifty Financial Services, that plays out the weekly expiry. So that's the most crucial factor today, and that holds the key really for me. In terms of flows, well, the net institutional data was positive. We were talking about on Friday, I had a bit of an off day. That's the FI and the DI data together. So that's good news. The flows continue to remain stable. I said the FI data was positive, right? Just take a look at the long edition. You want this market to be a little net short, which is the case. They're 51% of their positioning on the short side. But they've added 11,000 long contracts as well. Now, moving into yesterday's session, there was a lot of call writing, which quickly got unbound. And there's aggressive put writing that we've seen. 1.5 lakh put contracts have been added. Now, that's a good sign telling you that the base of the market has moved a little bit higher as well to around that 18,050, 18,100 odd just in the near term. Strikes that were active, 18,200, 18,250. Between them, they added close to around 90 lakh shares. So aggressive writing is what we're seeing at those levels, which brings you to a support zone. Going by that put writing that we're seeing for the day, the support zone will be around 18,150 to around 18,200. But since it's the Nifty Financial Services expiry, the most crucial factor will be what happens on that index. Now, the 19,200 put yesterday was very, very active. The premium ended at around 22 rupees. But closer to the high or the start of trade, it was around 180, 190 rupees. So those put writers, they're looking at the 19,000 odd level holding out. Pull up the Nifty Financial Services Index. Yesterday, it ended close to around 19,300. Now, support comes in at around 19,000, but it's on its way to hit a fresh 52-week high, which will be very, very important. If the Nifty Financial Services Index can get to that 52-week high, then we're off to the races. We're seeing 18,500 and thereabouts as well. SGX if we're suggesting a bit of a downtick, which is not such a bad thing. In fact, you'll want to have a little bit of a deeper gash from a bullish perspective so that they can get into the index. Watch the Nifty Financial Services. For me, that holds the key.
All right. Well, before we go any further, let's just quickly tell you what is lined up in the first half hour of the show today. We get you updates from markets across the globe. Lawrence Belanco will decipher the global price action. He's, of course, the technical analyst with CLSA. We will discuss the stocks to watch out for, results, non-results, news flow, all of that with our research team on Top 10. And at 8:30, we do a fundamental stock analysis with Gurmeet Chadha of Complete Circle Consultants. So you don't want to miss those conversations.
Okay, so plenty to talk about. On the equities front, we have, in fact, a view coming in from Mahesh Nandurkar of Jefferies, and he's quite positive on the market. He says, notwithstanding the global concerns, India is on a path of capex cycle recovery. Investors have warmed up to a capex upcycle, but there is a perceived dearth of playable stock ideas. As the investment cycle gathers pace, Mahesh believes that the investors will be forced to buy the stocks even if they are considered expensive. Jefferies is comparing this situation to the re-rating of consumer stocks over the last decade, and their preferred capex cycle plays are L&T, Thermax, Polycab and KEI Industries. So another optimistic view coming in over there.
All right, so money market views on the rupee. Abhishek Goenka of IFA Global says the Fed's latest policy indicates a data-dependent approach with no pre-commitment to aggressive tightening. The market expects a status quo in June and 3 rate cuts in 2023, but there is a disconnect between Fed's communication and market expectations. Back home, the RBI has been mopping up dollars to place a floor under the USD-INR pair, but the rupee is likely to eventually break in the direction of fundamentals, resulting in a downside for the pair given current favorable BOP dynamics with crude at $75 a barrel. He expects the rupee to trade in the 80.5 to 82.5 range for the coming weeks.
And on the bonds, Ajay Magnolia of JM Financial says stronger than expected US labor data led to yields retracing after the Fed's rate announcements. Domestic yields tracked the US Treasury and started the week higher. With decent FI flows and clarity on the Fed's policy path, domestic yields are unlikely to see any sharp movement on either side and expected to move in line with global markets. State development loans and corporate bond supplies is on the lower side for this week, and the only trigger could be the US and domestic CPI or inflation data slated for later this week. He expects the 10-year benchmark to trade in a range of 7.03 to 7.08%.
Well, we have a lot of stock-specific action. We're going to get to that in just a bit in our special Top 10 segment. We're looking at MGL, Birlasoft, Carbon and Universal, Kansai Nerulac Paints, VIP Industries, Andhra Paper, and Easy Trip Planners. They are stocks on the back of positive news flow, while we have 3 of them that could be reacting to negative news flow, which is Pidilite, Aarti Industries, and Kalpataru Park.
Okay, interesting mix of stocks as always to watch out for, but let's get you the global price action and what to make of all of what we're seeing. Lawrence Belanco of CLSA is now joining us to tell us exactly that. Lawrence, great to have you with us here. Thank you very much for your time. You know, from the lows of March, the market has seen such a smart up move. The Indian market especially, we're within striking distance, about 2, 3, 4% on the main indices from all-time high levels. You think in this move higher, we make newer highs and then perhaps move up meaningfully from there? What's your sense?
In the short term, unfortunately, we think we get to top of the range. So we're talking about 18,500, 18,800. That's likely to cap the upside in the near term. And then we see further ranging activity. If you look at the Nifty chart going back 9 months, we've essentially been trapped in a 9% wide trading range between 16,700 and this 18,800 area, which is quite similar to the profile of the S&P chart, which has been range bound between 3,800 up to the 4,200 area. And we see more volatility within that range before ultimately breaking out.
So you're saying that in the near term, the Nifty upside could be capped at 18,500 to 18,800. What about the Bank Nifty? That has assumed leadership, but do you see the Bank Nifty rise well above the 45,000 mark in the near term?
From a longer term perspective, we think that's the key sector to be overweight within India, and it'll be a key driver for an ultimate breakout in the Nifty. But again, in the short term, we're back at the highs seen late last year. We expect some hesitation and a pullback, but that doesn't take away from its leadership credentials from a longer term side. So look at adding on a pullback in the Nifty banks, but in the near term, again, some hesitation at last year's highs.
Hi, Lawrence. Good morning. Lawrence, what about the S&P 500, which you mentioned was in a bit of a range? It's closer to around that 42,000 odd mark. How are things shaping up out there? And also, I wanted a word on the dollar index, because from India perspective, this rally has also been supported by global cues, a weaker dollar and stable US markets.
Yeah, I think let's talk about the dollar first, because I think this is quite supportive, particularly for rest of world equities over US equities. So the general trend of dollar weakness has seen rest of world equities, in particular emerging markets, managing to outperform US markets. And we see, from a emerging market currency aspect, that a base is starting to develop in emerging market currencies that ultimately sets for a breakout from that range. As far as the dollar index itself goes, we've been trapped in a range year to date between 100 and 105. And as long as we stay below 105, we think the dollar has formed a major peak in the fourth quarter of last year. And that sets for a break below 100 on the dollar index and a move down to the 95 level. So from a relative perspective, again, rest of world assets, equities should outperform US equities. At the end of the day, that's a key setup. If we look at the S&P price action in absolute terms, we've got slowing upside. So our momentum indicators have not confirmed this recovery in April and the start of May back to 4,200. If you look at breadth reading, so number of stocks above their 50-day, 200-day, or even the advanced decline line for the S&P, again, that's lagged the recent recovery from the March lows into April, May. So that all sort of points that this 4,200 area is unlikely to be broken on a sustained basis and will remain range bound between the 38 and 4,200 area through the rest of the second quarter.
Lawrence, give us a broad sense of what the road ahead will look like, because you're saying 18,500, 18,800 cap here on the Nifty, bank, the US S&P at 42. So we get to that, the market dithers a little bit, but what happens then? Are we going to see a big swoon? Will the market just be flat for a long period of time? I mean, just a general way of to think about what price action may look like after that.
So, yeah, I mean, just to get an idea, through the rest of the second quarter, there's downside risk of 5 to 10% taking you to the bottom end of the range. So nothing changes from the price structure that you've had for the past 9 to 10 months for the Nifty or the S&P. But I think once we get through towards the end of the third quarter, fourth quarter, then we can have a platform for a breakout from those trading ranges. So, assuming that we get it through the 18,500, 18,800 area, third, fourth quarter of this year, we're talking about targets, well towards 21,000 for the Nifty at the end of the day. And again, we think that's led by the banks. But the remainder of this quarter, expect further volatility that we've seen in similar fashion to the past 9 months.
You're saying 5 to 10% correction in the second quarter in global markets, I mean, everything India included, right? I mean, broadly.
Correct. Yep.
And then a breakout in the third or the fourth quarter later this year, and eventually the market moves higher. I think you said 24,000 Nifty.
So, if you look at the upside target from the current trading range, you
21.
basically just around 21,000, yep.
Okay. And by when are you projecting those levels? Sometime next year?
Assuming we break out in the fourth quarter, that should be a first half of 2024 time horizon.
Okay, so you're saying fourth quarter of this calendar year. Got that. So we need to get past this 18,500 mark, and then the next level to watch would be 21,000. Got it. Will the Nifty IT contribute? Because although banks have contributed, the IT index is still down about 2.5 to 3% this year. Do you see a turn there?
Well, we don't see it as a leadership group. Best case scenario, it holds in the current trading range that you see for the Nifty RT sector. So the leadership that you had from 2020 to 2021, we don't think the sector replicates that and prefer the banks. So
if not tech, if you're positive on banks, any other sectors that you think could show up as leaders in the market over the next, say, 6 to 12 months?
Probably a smaller sector, but the real estate sector looks quite interesting, again, with a big base in place, a consolidation pattern over the past 12 months. And there's another setup where we can break out and see leadership, obviously a much smaller component to the market, but an interesting profile.
Indeed, and that's been the big outperforming sector actually here in India. It's up close to 11%, I think, just in the last 1 month or so. Lawrence, all that glitters is gold, right? That seems to be the case. And gold has been moving from strength to strength. Where is that one headed? Do you see higher levels out there?
Well, I mean, if you look at it in a number of currencies, the US dollar, you've already broken out. And I think ultimately gold in US dollar terms follows what we've seen in other currencies. And getting through the 2078 era gives us an upside target of 25.50. So, yeah, we would be a buyer there looking for that breakout ultimately.
Oh, okay, so you're looking at an upside target of 25.50 in gold, 25.30 thereabouts in gold. So there's still some more, ammunition left perhaps. Just one more question. You said in the very near term, there could be about a 5 to 10% correction that the index could see. At any point in time, do you think the market, the Nifty, could resume its earlier lows? I mean, 16, 17,000, 15,183 actually was the 52-week low. But do you see that being resumed any time in the near term?
I think the real threat for Nifty retesting that 15,100 area would only really come from a S&P break of the 3,800 area. And we'd only assume that scenario playing out on a much harder landing from the US economy. So that would be the level that we were looking at, a break below 3,800. That would threaten a break below 16,700, 16,800 for Nifty, and then line up for a test of that 15,100 to 15,300 area. Our base case is more of a trading range above that 16.7, 16.8 area, but those are the levels that would need to be crossed to increase the probability of a retest of the 15,100 to 15,300 area on the Nifty.
All right. Lawrence, I wanted to ask you about a heavyweight which is as good as an index, actually, the Reliance Industries. A couple of months ago when you joined on the channel, I recall that Reliance was struggling, actually, closer to around 2,100 odd. How are the charts looking out there? Do you expect it to trend higher? Will it be one of the leaders if the market has to move higher?
So again, I mean, we were looking at that as a trading buy off that 2,100 support area. We had slowing downside momentum. It is more of a trading range setup. Again, if you look at the bank sector, that's where your leadership's coming from. But Reliance holding above 2,100 and trading towards the top of the range at 2,800 it is a likely setup and a trade that I think you can stay long looking for that level.
And SPI is one of the top picks from the banking space.
Yes. So that you've seen the breakout in 2021 from a 10-year long consolidation pattern. So yeah, that's one of the key structural breakouts that you've seen in the banks space.
Lawrence, just one last thing. You briefly mentioned that the lows will not be revisited unless you get a big recession or anything. So, I mean, we seem to be in a regime where the market is okay now with higher rates, I'm assuming, for longer, as long as there is no hard landing. But, will that flip at some point when will it once again become good news is bad news kind of a regime? I mean, because we've seen these different phases, the market latching onto something or the other over the last 1.5 years.
I mean, I think that the key, if we focus on the US, is the bank sector, both the regional banks and the larger cap banks. If we see a break of the second half of 2022 lows and we fail to get any stability in the US banks, that's when we could see yields actually fall, but yields are falling because of greater recession fears. And if you look at the average performance of the US markets, that's the S&P in a recession, is that, within the start of recession, 200 days post that, the market on average is down 11%, while bond prices are higher, yields are lower. So I think that will be the key catalyst, that US banks have to stabilize to keep the market in the range. But if they keep on breaking down, the risk of a hard landing in the US increases, and the risk of breaking below that 3,800 area. So look for stability in the US banks to at least keep the S&P range bound between 38 and 4,200.
All right. Thanks a lot, Lawrence, for joining in, and appreciate your thoughts. That's Lawrence Blanco saying that in the very near term, there are some hurdles that the market has to cross. 18,500 to 18,800 is the near-term resistance. If we get past that, then 21,000 is the next mark that he's watching out for. So he's not really cautiously optimistic, I guess, if you'd want to use that term. But he likes banking and he likes real estate. Let's slip into a quick break. Our entire research team will be joining in to help us with the top 10 list of stocks in just minutes from now. Stay tuned. Welcome back. The bulls are back, it seems, and the Nifty is now at a 5-month high. But the important bit is, can we build on to our gains? We do have a lot of positive cues to work with. Large buying coming in from FIIs and a lot of stocks back on our radar. Banks are doing well, are now just 2% away from all-time highs. But plenty of stocks to watch this morning. Pidilite is topping the charts, post its numbers. Didn't look very impressive. Mangalam is here to give us the fine print. Mangalam, morning.
Good morning. So it is a weak set coming in from Pidilite as against street expectations this time around as well. Right from the top line, the revenues came in just shy of 2,700 crores. The street was working with a number above 2,730 odd crores. The EBITDA came in at 459 crores. Again, the street was working with 505 crores. As a result of which, the net profit was also a miss on street expectations. As far as the consumer business volumes are concerned, they grew 7%. The street was bracing itself for a number between 9 to 11%. And even the B2B business saw a flattish sort of performance. The only positive was the sharp expansion that we saw in gross margins, 500 basis points quarter on quarter and 330 basis points year on year. The important part is that the management said that they've reinvested some of their cost savings back into market development efforts. The B2B business faced some headwinds because of lower exports, and near-term environment is likely to remain uncertain. As a result of which, we expect some red on the stock. But mind you, it has been an underperformer. It was lower yesterday as well. So let's see if it sustains at lower levels or do people buy it from a longer-term standpoint.
All right. Mangalam, thank you very much for that. That's Pidilite for you.
Rima, could be lower exports and lower exports as well, right? As you said, that's why perhaps weak numbers. Just kidding.
All right. Well, Rima is here. Rima, good morning on Birla Soft and Carborundum Universal. Morning.
Hi, morning. So Birla Soft is actually a pretty good quarter. If you remember last quarter, the company was hit because one of its key clients, Invacare, had filed for bankruptcy. The company had taken a big provision. But if you strip out the impact associated with that, the numbers are looking good. So the reported dollar revenue growth is only up 0.5%, but like to like, removing Invacare in the base quarter, then we're looking at a revenue growth of more than about 3%. Profits too have now come in at more than 100 crore, which was a loss in the prior quarter due to the provision that they had made. The total deal wins have gone up by 24% on a quarter-on-quarter basis. In the conference call yesterday, the management said that they are targeting EBITDA margins of 15 to 16% in the second half of FY24, and they're looking at margins of 16% by the end of next year, Q4 FY24. So that said, FY24 top-line growth will be a bit muted because the base year, FY23, had Invacare revenues of about $14 million, which will not be there this time. So the reported revenues in FY24 will be muted, but the company is looking at margin expansion. Carborundum Universal also has reported a good quarter. Revenue growth 38%, margin expansion to 15.9%, and that's driving a multi-fold jump in the company's profitability. 137 crore compares with 57 crore of profitability. Numbers are seen year on year.
All right, thanks a lot, Rima, for that. Well, let's go across to Sonal. She's tracking MGL and Aarti Industries. Sonal, how did it look?
Well, for Aarti Industries, it was a weak set, lower than what the poll was suggesting as well. Revenues were flat to come in at 1656 crore rupees, which compares with the poll of 1747 crore rupees. EBITDA was down 13% at 252 crore rupees, again lower than the poll. The poll suggested margins to come in at 17.5%. They've come in at 15.2%. Profits are up 9% on a sequential basis, higher than the poll as well. That is because there is a write back on a quarter-on-quarter basis, and that's why the profits look higher. For FY23, EBITDA is up 12%, but margins are down 180 basis points to come in at 16.5%. So the management has been able to achieve its guidance of EBITDA for FY23 at 1,100 crore rupees. MGL, on the other hand, was a strong set, and it was a big margin expansion that we saw for the company, which was driven by price hikes. However, it was a miss on volumes. If we talk about revenues, they were absolutely in line with poll at 1610 crore rupees. EBITDA was up 52%, higher than the poll, coming in at 390 crore rupees. Margins 24.2% versus an expectation of 20.4%, and profits were up 56% as well to come in at 270 crore rupees. Now, as I said, volumes were down 1% sequentially versus an expectation of a 2% increase. However, the EBITDA margin, or the EBITDA per unit, at 12.8 rupees per SCM is at a 7-quarter high, so that really bodes well for the stock as well.
Okay, thanks a lot for that, Sonal. Well, Mangalam is back with us. Mangalam, Kansai, Nerolac, stellar set of numbers, and BIP strong as well?
Yes, beautiful set of numbers coming in from both these counters. For Kansai and Nerolac, the benefit is that if you have a higher share of revenue coming in from the industrial business, in a downturn you get hit worse. But, rather when the inflation is cooling off, you benefit the most as well. So if you just take a look at their EBITDA, that's grown by 100%. on a low base, of course. The gross margins have improved by around 400 basis points. They've reported a 13% growth in their revenue, and a large part of that has also been on account of recovery in auto volumes, which Sonia has been talking about as well. As a result of which, the net profit nearly quadrupled. Of course, this comes on a low base, and the sweetener is that the board has recommended 1 bonus share for every 2 that shareholders hold right now. Same is the case for VIP. Strong revenue growth coming in. We've been talking about how travel trends have picked up. Maybe people are buying a lot more luggage as well before they travel. So 27% jump in their revenue, 460 basis points improvement in their gross margins, and the net profit actually on the bottom line, the company reported a loss, but that was because of a 47 crore exceptional loss because of fire in one of their Bangladesh plants. Over and above all of this, we have seen the company announce a 200 crore capex. They've announced that they will expand their distribution and be present in every town with a population of 50,000 by the middle of FY24. See positive for both these stocks.
All right, Mangalam, thanks very much for that list of stocks. Surabhi is joining in with more on fourth quarter numbers that other companies declared and some stocks and news as well. Surabhi.
Thanks so much for that. So first on my ADAG is Kalpataru Power Transmission. Now the revenue growth was strong, but there was a marginal miss on the EBITDA front. The revenue was up 18%, EBITDA was up nearly 10%, but margins came in lower by 50 basis points, came in at 6.8% versus 7.3% same time last year. For FY23, they had a strong order book and strong order inflow. The order book was close to 46,000 crores and an order inflow of 25,000 odd crores. The silver lining in the results is they have a strong guidance for FY24, the revenue growth of over 30% and order inflows of over 26,000 crores. Next is Andhra Paper, strong numbers from there. Now remember, 72% of Andhra Paper is owned by West Coast Paper Mills. The revenue was up 39%. There was slight compression in the gross profit margins, came in at 62% versus 64%. The EBITDA was up 180%. The margins came in at 39% versus 19% same time last year, but sequentially the margins were 200 basis points lower. PAT was up 195% at 169 crores. And lastly on my radar is Easy Trip Planners. The board has approved identification and acquisition of companies in overseas as well as the domestic jurisdiction. They are going to identify potential targets that will engage in the business of cruise and tour packages services, hotel reservation services, and also medical and educational tourism. The company also incorporates a wholly owned subsidiary to carry on the business of general insurance. Now, this may provide value-added service of travel insurance along with their ticketing and bookings. So that's a positive for Easy Trip Planners.
Very helpful. Thanks a lot for that. So let's just wind up by giving you the list of positive stocks, positive and negative stocks actually. MGL, strong margin expansion there. Birlasoft, Carborundum, Kansai Nerolac, VIP, very good numbers. Andhra Paper and Easy Trip Planners also look good, while stocks with negative news flow, Pidilite, RT Industries and Kalpataru Power Transmission. But there's also a pickup in the world of crude. Brent crude has risen about 2 to 3% on the back of the recession fears globally receding. Manisha Gupta joins in for a roundup of all the action that's happened overnight. Manisha, hi, good morning.
Morning, Sonia. Thank you for that. Well, yes, we have seen a rebound coming for the crude oil prices. It gained 2% overnight, and this is the prices coming off after hitting a 17-month lows in the previous week itself. There is a Goldman Sachs report as well saying that the crude demand stress and the global supply concerns are overstated, and the prices should be higher from where they are right now. The street is also watching for the OPEC monthly report that comes on Thursday, and then the Saudi Aramco earnings also come in this week itself, and that would give a fair cue on where we are headed. In the metal sector, we've seen tin prices gain up to a 2-month highs. Copper rebounded 1.5% overnight, so we are off 4-month lows on that as well. Steel prices came in strong by up 2.5% yesterday and are trading in the positive right now. Minutes from now, the street is waiting for the Chinese trade data, and the further direction would come in from that.
All right, Manisha, thanks very much for that. We'll watch out for that data when it comes. We'll take a break here. We are back. Gurmeet Chadda of Complete Circle Consultants will join in with some fundamental stock talk. Later, we'll connect with Abneesh Roy of Novama Institutional Equities to talk about fourth quarter earnings as well as M&A deals in the FMCG sector, which have happened recently. Stay with us.
Welcome back. Hope you're having a good morning. Well, let's welcome on the show Gurmeet Chadda, Managing Partner and CIO at Complete Circle, who joins us on the show. And we're also joined by Abneesh Roy, Executive Director at Nuvama Institutional Equities, who joins in as well. Good morning, gentlemen. Thanks so much for joining in. Well, Abneesh, let me come across to you first, because Pidilite is likely to be the stock in focus in the initial part of trade. That's because there was a margin miss and there was a volume miss as well. And as we all know, it always trades at elevated valuations. What would you do with the stock from here on, given that it's going to start on the back foot? And would you look at buying into it?
Yeah, there is a slight miss. Results came post-market. So yes, there could be slight negative reaction. We don't expect a significant correction given FY24 will see benefit of full correction in the VAM prices. Even this quarter, if you see, the miss in EBITDA is more because of the slight miss in terms of the revenue. Margins have expanded and margins are at a 7-quarter high. Going ahead, discretionary slowdown is what is impacting Pidilite, because Pidilite, if you see, the product Fevicol is used in almost everything. So the slowdown which we are seeing in the discretionary segments, essentially footwear, apparel, furniture, etc., to some extent, clearly, we are seeing the impact of that. But having said that, I think the EBITDA growth for Pidilite will be strong. Pidilite has also entered decorative paints, which we think is a step in right direction. But we don't think that Pidilite will be spending very high on advertising. It's just through the existing distribution and channel. They'll try to sell incremental paints. It will not be a very cutthroat battle with the market leaders.
Okay, since you're talking about paints, let me take that discussion forward with Gurmeet. Gurmeet, hi, good morning. Kansai Nerolac was a really strong showing. I mean, auto demand has picked up, industrial demand has come back, and this is a space that you track very closely. How are you feeling about the numbers? And as an investor, which stock would you buy in this basket?
So Sonia, actually, I think these are pleasant set of numbers. Not only because of the volume growth. I think after some 7-8 quarters of margin compression, the margin expanded, and obviously the bonus issue would also help 1:2 in terms of the near-term segment. And I think not just decorative paints, the industrial segment, which is led by automotive, etc. Also added to it. So I think it's a positive set of numbers, but you are already at, like, let's say about 50 times, so maybe there could be a near-term reaction. I think the better segment, within that housing building materials, since the demand continues to be robust, is basically something like cables and wires, where you have some good companies available still at, relatively the valuations are always relative, maybe 30 times. Then you have some in sanitary ware, something like Cera, which is slightly more reasonable. So I would play that. Paint as a segment looks slightly expensive, so would not incrementally add to it. And also look at something which is more in the affordable housing segment, because that's something which is expanding very, very quickly. They don't compete much with banks. Banks in fact tend to buy the affordable housing portfolio as part of the PSL requirements. So something like an Home First and some of the niche players, who operate in a specific geography.
Okay, I'll come to Home First, Gurmeet, in just a bit. Good morning, good to speak with you, and good to have you with us as well, Abneesh. Good morning. Your thoughts, Abneesh, on this TCNS ABFRL deal, which the market doesn't seem to be happy at all with. TCNS was down some, I think, 20%. ABFRL was down 5-6% yesterday. Just your thoughts on both, assuming, viewers own these shares. What would you recommend?
Yeah, I think this TCNS sale has been under discussion for a long time. And of course, TCNS, if you compare the growth versus the other apparel players, clearly it has lagged. So definitely what we see is ABFRL has done multiple acquisitions. Also, it has gone into innerwear on its own organic manner. So we do see that, yes, ABFRL is a much larger company, understands retail much better. Also, in terms of portfolio, if you see, ABFRL now gets a play in the ethnic wear, especially in the mid-end. Market, of course, has been concerned that ABFRL has been doing multiple acquisitions in the last 2 years. Of course, because of COVID, a lot of the acquisitions became possible. And ABFRL has been closing the gap in its portfolio. Our sense is now we are at the fag end in terms of the M&A. In terms of the EPS dilution, yes, first year, of course, will be EPS dilutive. And in terms of the share dilution also for ABFRL, 5.7%. So we prefer ABFRL over TCNS for sure. But definitely this has been an acquisition which has been under discussion for a long time. And we expect ABFRL to definitely scale up TCNS given its better understanding of the retail over a 2 to 3 years time frame.
Okay. Gurmeet, there is a lot of action in the primary markets as well. I mean, the largest IPO of the year, right? So far, Mankind Pharma, the listing is happening today. And it looks like a tick mark on all the boxes. It's a debt-free company, very strong growth, popular brands, large institutional, participation as well in the IPO. How are you feeling about it? And post-listing, is there scope to buy?
So I've been working associated with them for more than 10 years now, including my Citibank and Reliance Mutual Fund days. It's in a branded generic business, which is more like, if I were to compare a rural FMCG business, because they're extremely strong in the hinterland. So if you see in terms of number of prescriptions, they are the highest. Since they are more in affordable medicine, the top line wise, they are in top 4. Also, the productivity they have in terms of MR, they almost cover like 4 lakh plus doctors. So it's more like an FMCG distribution reach, affordable play. Plus, they have almost now 9 therapies, which do about 200 crores kind of a top line. The consumer health business is doing well. They are market leaders in contraceptive pills, Plega News, condoms, etc. And that also business is shaping and largely domestic company, 97-98%. So I think should be a steady listing and the valuations are reasonable or fair, I would say. And I think should be a core portfolio stock. But this is not a stock where you expect, very high returns. Could be something to do with listing which could happen today, but a very steady counter to look at more for the long term.
Okay, all right, Gurmeet, just hang on. Going back to Avnish for a couple of questions. Avnish, yesterday the big mover was Marico. Solid set of numbers. The street liked it. What do you do with the stock from here on? What's the rating? What's the target price out there?
Yeah, it was a overall good set of numbers with 5% volume growth. The margin expansion, I think, was the key surprise. In FY24, Marico's Saffola Foods portfolio also will see a decent growth with 850 crore revenue target. This quarter, Saffola edible oils was quite weak. And this we also saw for Adani Wilmar, for example. There has been, of course, in-home consumption in the base quarters in the COVID era. And also price cuts have happened. My sense is further price cuts in edible oil is something which government is also driving. So overall, we like Marico from longer term perspective. But given the move which has happened yesterday, I think near-term upside will be limited. In fact, we prefer Britannia over Marico, given the kind of numbers which Britannia reported, 12% PAC growth, 45% EBITDA growth, and wheat also for next year, if you see, the crop versus initial expectation has been much better. 30-40% higher government collection has been there. So we prefer Britannia over Marico at current levels. But yeah, Marico's margin performance was quite decent.
Okay, but on Britannia, what kind of valuation headroom does it have now? Because, that is the big concern, right? That there is growth, of course, but it doesn't come with any valuation headroom. Your thoughts?
So 3 things, Sonia, will happen. One, of course, Street was a bit disappointed with the 2 to 3% kind of volume growth which they reported. But customer doesn't buy 100 gram or 200 gram of biscuit. He buys packs. So packs was 12% growth. Now what will happen is in FY24, Britannia will give back the grammage cuts which they have done. Now they'll give back the grammage back to customer. So volume growth will revert to a much better number. Of course, with wheat also crop being better than expectation, my sense is the EBITDA margin and gross margin good performance will sustain. If you see in terms of croissant, dairy and rusk and cake also, they have been doing well. So currently, if I see, yes, stock is now out almost 40 times FY25. In fact, we upgraded our numbers by 3 to 5% EPS for next 2 years. But Go Airways going away as a concern, that is a positive because that was seen as a concern. So we don't see any indirect exposure to Go Airlines, but we continue to monitor that. But yeah, on the face of it, it seems that it's a positive.
Gurmeet, just a few stocks your way. Now, one is earnings. Both UPL and Aarti Industries. We spoke with our UPL yesterday. Aarti will join us today on the show. Numbers look pretty subdued. And the guidance, even though it's lower than what they've done in UPL's case than FY23, it still looks a little aggressive given the environment. Your thoughts if you have any. Second is Chola Finance. It's done remarkably well, now trading at 7 times book, FY24 book. So are you comfortable paying that much? And then PSU banks, if you will, where generally 3-4 banks which have reported, and we have the management of Canada joining us a little later, there is some margin pressure. Go on.
So I'll start with the banks, Prashant, since that's the recent one. I think we've been sticking to SBI for some time. Tactically, Bank of Baroda, because for us SBI is a more structural play. I think because if you look at the credit cost metrics, you look at the restructured book, look at the way in fact some of the metrics on asset quality are as good as some of the private sector banks, and there is valuation comfort. There was a good price correction due to the Adani episode. So that remains our pick. Others we are avoiding. In fact, there are better banks in small private sector banks where there is valuation comfort, and there could be some re-rating if you have better 2-3 quarters. IDFC First we have seen is doing a very, very good job. CASA is almost now 50%. I saw an NII growth of 35%, and the wholesale book continues to degrow. So their legacy book continues to shrink, which is very healthy. So if they can report another 2-3 good quarters, possibly some re-rating more can happen. Federal Bank also, if you see there's a cyclical agri book slippage which happens this time. Otherwise, that also is like 1.2 book value. So that's on the banking side. On chemicals, my sense is you have to maybe wait for another quarter. There is another one more quarter before the repricing sets in. And there is a bit of a base effect. UPL has valuation comfort. It's always been cheap for reasons other than financial performance also. So you got to be very selective here. I would start more now on agrochemicals because the rural economy will see some push by the government. There are 6-7 state elections as far as the market is concerned. So that's something we'll be more selective. I'm more comfortable right now with PI, although valuations have been on the high side. There's some of the fluorination themes where the demand outlook is strong.
Okay, and 7 times for Chola, fair? Or,
I think. So NBFC, there's some catch-up, Prashant. I think after good numbers, both for Bajaj, if you see, the banks went up, and players like a Bajaj Finance, bit of Poonawalla, Fincorp, Chola. I think now you should review them more on earnings. I think because I'm not saying price book multiple should be completely ignored. It's on the high side, but the asset quality test has stood the test even in times like COVID. And they are more like, to play on how's the consumer demand shaping up. So Chola more for vehicle, Bajaj more on, the personal consumption side. So earning, the P multiple also should be taken into account. But yes, valuations are rich.
All right. Gentlemen, let me just thank Abneesh. Abneesh, thank you for your thoughts. And Gurmeet, just stay on for a tad bit. We'll need to take a quick break. On the other side of the break, we have our technical experts coming through. Mitesh Thakkar, Sudarshan Sukhani will join in for some trades.
Okay, welcome back. So we've got the SGX, which is down about, 12 points. It's absolutely flat, 18,338. Mitesh and Sudarshan are with us with what they're making of things as we start another trading session. Yesterday was a good session, a trending day all the way, and we left off almost at the day's highest point. Sudarshan, what's the sense this morning? A more quieter Tuesday, or you think, the market will pick up and one should look for upsides?
Good morning. Yesterday was a very good day. We went long in the morning. I said that we should be buying now after 4 days of consolidation. And luckily, we had a trend day. Now, trend days usually, Prashant, will not repeat themselves. I mean, it's usually anything can happen, but I wouldn't bet on it today. So today should be, as you described it, a quiet day. The trend is still up. So within this quiet day, we should be looking at small dips to go long. That trend continues. You don't look at a quiet day to go short. You still wait patiently. I think we'll see lifetime new highs soon enough. So just position yourself to take a long side, whether you are an intraday trader or a positional trader. For both of them, the trade would be to be long on dips, and you'll get the dips.
All right. And Sudarshan, the stop loss when you're going long?
Well, it's 18,100.
Okay. All right. Thanks for that. Morning, Mitesh. What about you? How do you approach the index?
Morning, Nigel. So I think the directional bias is on the upside, though I've been, kind of cautious in buying closer to about 18,200 to 50 zones. I also have a mildly deeper stop loss at 18,070. So the idea for me would be to buy on intraday dips. In case you get a dip closer to about 18,150, that's where I would want to buy and keep a stop below 18,070. And then I think, once we start getting past this 18,250, 270 zones, then I think we're looking at a test of 18,450, 500. So trade with more of long buys very clearly, but from a technical point of view, wait for about say 70, 80 point kind of a dip to buy afresh.
Okay, wait for a dip. I don't know if you'll get it, but that's the prudent thing to do, says Mitesh. Let's talk about individual stocks then. Gentlemen, morning to both of you. Sudarshan, what are the stocks you're looking at and where does the Bank Nifty feature in that, considering that, it has once again assumed leadership?
Well, I'm not, see the Bank Nifty, you're saying it's assumed leadership, but the chart suggests that the Nifty's crossed last week's highs. The Bank Nifty hasn't done that. So I would be a little more careful about the banks rather than the larger index. So my focus remains on the Nifty this week, at least for today. HCL Tech is a buying opportunity. The stock has been sideways. It's suggesting that a breakout is coming. Buy with a stop under 1,050. Again, Bharti Airtel comes as a buy. It's a very choppy stock. Every time I say Bharti Airtel buy, it drops for 2 days. But anyway, we'll take this chance again. Buy with a stop under 778. It's more of a positional buy. If you keep and hold it, you usually make money. Lal Pathlab is an intraday short. The stock has not rallied as much as the Nifty did. It's underperforming. And I think now it's probably going back into its downtrend. Stop at 1962, above 1962. It's only intraday. And Ashok Leyland is another buying opportunity. A very attractive bullish pattern is on the verge of completion. Buy with a stop under 137.
Right. As long as on Bharti, Sudarshan, as long as on the third day it goes up, right? On a lighter note. Well, Mitesh, what about you? What would you trade?
Yeah, I have more of buy calls. Dalmia Bharat, and yesterday we had a buy on Ultratech and Ramco Cements. I think the entire cement pack is looking very interesting. So today I think there's a buy on Dalmia Bharat. Keep a stop below 2050. Look for targets of 2160. Loris Labs gave a good breakout. Buy here with a stop at 324. Look for targets of 345. And Tata Consumer is a buy with a stop at 774 for targets of 810. One sell call, that's Polycab. If it breaks below yesterday's low of 3250, go short with a 3281 kind of a stop, and 3190, 3185 would be the targets.
Okay, all right. Thanks a lot for that, gentlemen. Well, let's get in Manoj Muralidharan as well for some derivative strategies. Hi, Manoj. Good morning. What do you have for us today?
Good morning, Nigel. Nigel, I guess it is put writing which is working at least week on week, because last week, I guess 18,100 strike on the Nifty, and now even if you look into the FI stats that we have yesterday, there's a huge option sell figure. I guess it is more into an 18,200 strike put option for this weekly expiry. So buy on dips becomes the rational, or that's the trend for the day, and we believe that intraday the futures, Nifty futures, might find support closer to the so-called 18,200 to 230 levels. So that becomes a buy, and we believe that the resistance now on the Nifty, at least in terms of option writing, would come closer to 18,350 to 380. So that's a trend that we have on Nifty. Stock specific, I believe that there has been sectors which is like auto, banks and finance which has been doing good. But now there is a possibility that we might see buying coming into power sector, and wherein NTPC tops the list. I guess 175 is a good level to go long. The stop loss should be 170, and the stock has a potential of 184 in the short term. So that becomes a buy. And IT, if not on the positive side, if you see the dips are being bought, so we believe that TCS again can be a good candidate. We believe 3220 to 3230 should be a good level to go long. 3,200 as a stop loss, and the resistance would come closer to a 3,300 to 3,310 as a target on TCS.
Okay, all right. Thanks a lot for that, Manoj. That's Religare Broking. Let's slip into a quick break. On the other side, we'll come back with a pre-opening rate. We also have Santanu Chakrabarti of BNP Paribas to talk about their Q4 earnings in the banking sector. Do stay tuned in.